Basi Basi Financial Planning was set up in April 2010. That was the authorization date. The primary aim was to use a new investment methodology, a company which was designed for the RDR landscape and had fees at its basis, but had a different way of interacting with consumers than a traditional IFA practice. We ran that concurrently with an existing business on a more traditional model until June 2011, when we merged the two together, and Basi Basi Financial Planning is a result. Our investment process is first of all predicated on mathematics. Now, maths has to be at the centre of any decisions which are made. We believe that being able to allocate the level of risk which a client wants to take and then relate that into our mathematical analysis of the market will lead to the best outcome for the client. We use two risk profilers with every client. We use Morningstar's, which is effectively a 1 to 5 scale, and we use an alternative, which is 1 to 10. The reason we do this is to force the client into a discussion to be able to narrow down the exact level of risk they want to take. Once we've had that discussion and we've agreed the level of risk, we will then have a selection of model portfolios which they will initially fit into. We will then customize this portfolio to represent the holdings that the client may have. So, for example, if the client has exposure to residential or commercial property, we will pare down exposures to both the direct property sector and also other underlying funds which have some exposure to property. We use Morningstar's X-ray process to help us to identify where those points are and where we need to then make adjustments for our client. Once we've built a suite which is suitable for our client, we then use a reporting functionality from Adviser Workstation to help us to present that to the client. We always make sure the client can explain the process back to us. If they can't, we continue to work with them until they can, because in our opinion, if the client doesn't understand why they are invested, where they are invested, they can hardly then have a realistic expectation of performance and other matters in the future of that investment. What we then do is we will then execute that, but we will keep a constant monitor on the mathematical figures which led to us recommending those funds in the first place. We believe the data is only as good as yesterday. Fortunately, we use Workstation to monitor that data for us on a daily basis. It will then alert us where funds move outside of the criteria which we laid down in the first place. Adviser Workstation strengthens our client relationships by the speed at which it can produce reports which are useful and understandable by our clients. They can access this via web portals and via their mobile phones, and this in turn keeps us in front of our clients. That makes them think about us when investment opportunities arise.